Hello, traders, and welcome to my session on why the butterfly. I'm going to dive into the magnificent 7 reasons why you need this trade in your options trading arsenal. The butterfly isn't just a trade, it's a weaponized strategy that's wielded by seasoned professionals like myself for years. Before I dig into the butterfly, though, let me tell you just a little bit about myself. I'm a trader of 30 plus years, and over the last 10 years, I've assisted many options trading companies such as Option Alpha, Option Trader's Assistant, Aeromir, Online Trading Academy, and Option Strat with trader coaching and education. And most recently, at the end of 2022, I launched my own education site and alert service. So that's enough about me. Let's get into why the butterfly is so revered amongst options and income traders, more so than condors, calendars, diagonals, and verticals. So let's start with a deeper dive to understand why. So let's look at magnificent reason number 1. Probably the number 1 reason is time is your ally. We harness the power of theta decay to relentlessly drain value from the options that you've sold in the butterfly, putting time firmly on your side. Throughout these various sessions, I'm going to be using one of my favorite tools to illustrate a number of these points, and that is Option Strat. It's an excellent modeling tool, and you're going to see why as I go through these various sessions. The first thing I want you to note in the butterfly is that at the short strikes here are 507 strikes where we are selling a call at 507 and a put at 507, which is close to at the money here. Our market is moving just a little bit. We have a maximum risk in this case of $86. We have a maximum reward of $613. That represents the peak of this tent right here. So the key is we have an excellent reward to risk ratio in this trade. Our break-evens here are all the way out at 500.87 and 513.13. Now, why is the butterfly so strong in this area? It's because these options here that we are selling at or very close to the money. In doing this, that's when you get the absolute most amount of money for those options. Just to give you an example, if I come in and look at the 507 put in this case, I'm selling that for $813, $8.13. Now, let me look at a comparable trade, the Iron Condor, and show you how this varies. Remember our break-evens here, right around 500 and 513. So we have essentially the same break-evens, 500 and 513. Our risk is a little less here, but also look at how much lower our potential reward is in this trade. That's because the options that we're selling are not at the money. So I'm only getting, in this case, $7.38 for this one, and I'm getting $6.20 for this one. So if we come back to this trade, where I'm getting $8.18 and $10, I'm getting significantly more because I'm selling these at the money. My wings are at the same location. So again, the key to a butterfly is being able to sell the short strikes that have the most value, and then we wait for those short strikes to decay. At the start of this trade, this is where we're at. We're right here. If I were to enter this trade today, and then decay will happen over time. As days click by, my P&L, this is what we call T0 line, will mound up to higher and higher levels of profit. So theta decay is the number 1 top reason why I like a butterfly. Mastering the butterfly and its various configurations isn't about adding another tool to your belt. It's about unlocking a strategic powerhouse trade that's proven by countless professionals. So embrace the butterfly and elevate your options trading to new heights. If you would like to see how I traded 5 different butterfly trades from start to finish, starting with a simple on and off butterfly, all the way through 4 more complex butterflies with increasing levels of complexity, I have an offer for you. In addition to that butterfly offer, I'm also going to share 5 calendar and diagonal trades with you that also range from very simple to more complex with a host of adjustments included. I often use these trades around binary market events like earnings, Fed announcements, etc., to capitalize in the spikes in volatility. In these trade examples, I'm also going to spend about 45 minutes showing a butterfly, a condor, a calendar, all traded live around the same company's earnings announcement. And I'll be comparing and contrasting those and show you how each one of those did and why some did better than others. So please check out this special offer